Today, we're on the ground at Consensus 2024, one of the biggest crypto conferences in the world. Crypto exchange Gemini returns more than $2 billion to customers after pausing withdrawals about a year and a half ago. And James Davies, the co-founder of Crypto Valley Exchange, discusses why he's among the thousands of people descending on Austin for Consensus. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos, on the ground here in Austin, Texas, as day one of Consensus 2024 is underway. Organizers here tell me that they expect about 15,000 people to descend on the Austin Convention Center, on par with last year's attendance. But I can say that the sentiment I'm hearing from attendees is very different than last year. People are excited to talk about the latest developments in the crypto space, and while here, we'll be speaking with some of the biggest stakeholders in digital assets and in TradFi. We'll have more from Consensus in just a bit, but first, let's take a look at the markets. As of noon Eastern, Bitcoin dropped to the $67,000 level. Ether fell more than 2.5% to the $3,700 level. Solana, however, held steady at $168, as PayPal announced today here at Consensus that its stablecoin PYUSD is now available on the Solana blockchain. The development comes about 10 months after first debuting on Ethereum. According to PayPal, the Solana blockchain is known for processing massive amounts of transactions at high speeds with low costs, which provides, quote, significant benefits for the commerce use cases. Okay, let's talk about a few of the other stories that we're following. Gemini announced today that it will return nearly $2.2 billion to customers of the crypto exchange's defunct crypto lending program. Now, the EARN program paused withdrawals in November 2022, and customers had their funds locked up ever since. In an email to customers today, the company, which is owned by twins Cameron and Tyler Winklevoss, said that about 97% of the digital assets owed to users by Genesis, Gemini's lending partner in all of this, as of the suspension date, are now available in their Gemini accounts. This comes after Gemini's previous announcement that it had reached a settlement with Genesis and other creditors in the Genesis bankruptcy, which will result in all EARN users receiving 100% of their digital assets back in kind. Now, that means if users lent 1 Bitcoin in the EARN program, they'll receive 1 Bitcoin back as well, as any and all increases in the value of assets since they lent them into the program. The development follows a $2 billion settlement with the New York Attorney General and Genesis, meant to make defrauded crypto investors whole again. Next, Bitcoin miner Bitfarms is publicly responding today to the, quote, unsolicited takeover proposal from Riot Platforms, saying the bid significantly undervalues the company and its growth prospects. Now, that's a determination made by a special committee of the board comprised only of independent directors. Today, Bitfarms confirmed that it received a proposal from Riot on April 22nd to acquire 100% of Bitfarms' common shares at a price of $2.30 per share. Now, Bitfarms says that the company had received takeover interest from other parties and stressed that it's committed to maximum value for shareholders. Last, Ripple donated another $25 million to the digital asset super PAC Fairshake in its support of crypto-friendly political candidates. The latest donation is on top of the blockchain firm's initial contribution of $25 million last year. Ripple made the announcement this morning, saying that it's proud to contribute to shaping a positive regulatory landscape in the U.S. The firm's donations account for about half of the roughly $100 million that Fairshake has raised so far from crypto companies like Coinbase and executives including Gemini's Winklevoss twins. We're sitting down with Ripple's CEO Brad Garlinghouse here at Consensus in the coming days, and we will bring you that conversation on this topic and more. All right, back to Consensus 2024 for our main story. I spoke with James Davies of Crypto Valley Exchange to find out why he came to Austin for the conference, what he's hearing from attendees on the ground, and why he thought that crypto winter was the right time to start his exchange. So we're here at Consensus 2024. You're our first guest on the ground, and I believe you landed at 4 a.m. this morning. You're coming in from the UK. And why is that? There are hundreds of conferences around the world. Why did you feel it was important to come across the Atlantic for this one in particular?
So, as we've talked to lots of people across the marketplace, this is the landmark conference. This is where everybody says they're going to be, and they're going to be available to network. So if you want to make it to just a couple of conferences and be able to see an awful lot of people and be able to get a good value for money on how you're spending your time, then Consensus is one of the few names globally that you would go to.
So you and I were both at Consensus last year as well. I was talking to Coinbase about their legal fight with the SEC, a lot of centralized crypto exchanges under fire, a lot of crypto firms winding their way through bankruptcy court. This year, how would you compare the spirit on the ground so far this morning?
Well, clearly I've only been here for a few hours, but I have noticed a few things that feel different from last year. I'm seeing a lot more Patagonia vests. There are a lot more traditional finance people walking around. When you've spent a good amount of time in traditional finance, you can pick them out. So there seems to be a really positive vibe. There seems to be a lot of people in here that aren't just Web3. I can still see there's lots of hoodies, lots of Web3 builders around. So it's a good mix. It feels like strong and positive. You can see that response. And you can see a lot of the brand names around from people who you would say, well, how were they going to respond to that last year? How would they respond to the SEC? And they seem to be here. They seem to have a big presence, and they seem to be very visible.
You mentioned the mix of TradFi and folks from the Web3 space. You yourself have experience in DeFi, crypto. You were the former COO at the London Derivatives Exchange. And I think that this narrative of institutional money coming into the industry has been a big one, especially this year at the launch of spot Bitcoin ETFs last week, just getting that SEC rules change, which gives essentially the green light for spot Ether ETFs. A couple of questions, though, about institutional money, because we've seen interest wax and wane with respect to Wall Street coming into the crypto ecosystem. Is it different this time around, or is it more dedicated? And the reason I ask this is because I was going through a lot of the 13Fs. I was reaching out to the banks that now have exposure to Bitcoin through these spot exchange-traded funds, and a lot of them are saying that this is more our wealth management clients who have an interest. It's not necessarily the bank endorsing crypto as a new asset class that's here to stay.
So the banks are classically driven by their buy side. So they've always been responsive to the asset managers, to the pension funds. And if your conversation points are directly with the people at the banks who are driving that flow through their prime brokerage, then that's the response you're going to get. It's always going to be about that. What I think is more interesting is when we talk to the proprietary trading desks who have maybe a little bit more license to go in different directions. And over the last 20 years, a lot of those have spun out to the banks and set up at the side. And they also come and use the banks as service providers in traditional finance. They are here in droves. It was really notable in London, and I can already see a couple of the same faces around Consensus. And this represents individual wealth that's held within proprietary trading funds, within professional trading groups. And what they do bring is not just a large balance sheet, which will come and trade, but trade in a much more active way, maybe than the ETFs will, which will buy and hold, but also an enormous amount of investment in infrastructure and tooling and equipment. And we've seen this previously in other cycles, in other asset classes. Classically, we saw this in '98 through about 2001 in the whole first arrival of web and the automation. It was these people coming off trading floors and setting up businesses that really drove the adoption and the next step. And I see that here now. I see the same people and the same faces. Now, a lot of them are walking around with people who are bright and young and capable and understand how this market works alongside them. But you see the same people here and the same activity, which is really positive in terms of capital inflow into this market.
Is a spot ETF for Solana and XRP next?
Oh, that's a question. Well, I've got to say Solana, because I think Solana has such a good story around it. That it's going to be continuing that way through over the next year. The question is whether it's one of those or something else that comes through, because there's quite a large group of L2s that seem to continue to push that story. So maybe you don't even launch a spot ETF on a single coin next. Maybe you do a spot ETF against a collection of L2s or something like that that's more interesting. But Solana's definitely got a better story.
You know, we've got Bitcoin trading at around $67,000, Ether in the $3,800 range, neither too far off of those all-time highs that we saw in March. But do people even care about talking about the prices, or are the conversations more, centered on the tech and the developers and the kinds of products that are being built on blockchains right now? This
is the classical fundamental versus technical question. So technical is always interesting because we always want to look at a chart. We always want to see how well we're doing, what could the upside be, but it is a little bit of reading the tea leaves. The professionals are always looking at the fundamentals, always trying to see what the long-term drivers are, because the capital's going to be around for a lot longer. So I think most of the conversation here will be about the fundamentals, but when we all finish our day and go back to the bar and sit around and talk to people, we'll all take a look at the chart and see how things are going, what the responses have been.
So you launched Crypto Valley Exchange in December, yes?
So we put the brand out there and pushed. Our go live will be in July. Our testnet went out in December.
And what was the thinking behind that timing? Because at that point, I had just finished 5 weeks worth of covering the Sam Bankman-Fried criminal trial. He was sentenced recently to 25 years. That was also after Binance had just settled with the U.S. government to the tune of $4.3 billion. Coinbase in active litigation with the SEC about their operation. Meanwhile, they had already listed, so they had gone through many levels of regulatory approval to even get to that point to be a publicly listed country in the U.S. So you're running a centralized exchange, or you soon will be. What was the thinking behind that timing to go public with it in December?
So decentralized, but the big difference here is how to do this right. So we see a lot of different models across the decentralized and centralized spaces. We see this backstory where all of them launched perpetual futures contracts, and they launched them largely because they were payments companies, and when you're regulated as a payments company, you can't launch futures and options, you're banned from that. Perps wasn't mentioned anywhere, so they all launched perps, and then they all had to contend with the regulation changing around them, and people saying, well, actually, you are promoting financial products here. Decentralized exchanges, we still don't know how the regulation is going to deal with that space. But what we do know across all of them is that they need to be done the right way. There is an absolutely massive market demand signaled by the amount of interest in perpetual markets. It's definitely the main barrier between here and the next step for cryptocurrency is how do we get capital efficient? How do we make sure that all of the normal Web3 treasurers, the people who've raised money for their projects, are actually able to hedge out their exposures and put their capital to work in a more effective way? How do we make sure that the new players that are coming into the market that we've just talked about, the traditional financial players, are able to access the tool sets that they access for every single other asset class, from sub-Saharan Africa to rural Indonesia, inside cryptocurrency? We need futures and options, and it has to be done in a way where we're protecting people by doing it in transparent and in the light. So we believe doing that all on-chain where everything can be verified is the obvious solution. It's just a lot more complicated than trying to do it in a centralized way.
You announced last month that you raised $7 million. What valuation was that at?
That was at 35 million. We give 35 million fully diluted because we're in tokens.
So I've been talking to a lot of founders, and they say it's a very difficult time in general to raise money. When they do, it's at valuations that are far off of the kinds of numbers that they might have seen in 2021, 2022. How did you find the process of raising funds?
Actually, not too difficult at all. I mean, it was, for us, about a 6 to 8 week process with some relatively significant names in there who went through quite an extensive due diligence process on us. But we came to the market with everything ready to go, all of the maths on our risk, all ready to publish. We had a huge, great white paper online. I think the preparedness that we had made that much easier. And I'm seeing that as I talk to other projects via the same VCs and via other people in the network, that there is an expectation now that you need to be able to show your homework. And it's not just that you have a really nice vision. You've got to be able to articulate effectively why you're different and why you're going to have an impact so that they can see what the return will be. Really trying to open up this market is ours. But if you've got the homework done, you can also do the rest of this very quickly.
Okay, that's all for Crypto World today, but we'll be back again tomorrow with more interviews from Consensus 2024, and we'll see you then.